Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers were active ahead of 1868, and we got a pullback down towards 57.5, reaching pretty close to that breakout spot of 56.5 that we talked about. So essentially a breakout test overnight, and very balanced heading into the open at this point. Now, if we zoom out and look at the bigger picture, we know that there's still potential for sellers to enter right here at 66 to 68, but because we've balanced here quite a bit overnight, we do need to be careful on any approach of that area from this point forward, because there's still that potential that it could break out to the upside and go up and test the 75 to 77, where we would then expect sellers to be active again. So the overall expectation on the day is more of a balanced type session, but if we break out to the upside, there would actually be higher odds of the market balancing, whereas on the downside, it can still balance in a range, but there's potential that if we start heading lower and if we break below initial support, that it could trigger a little bit deeper of a pullback, and it could shift control to the sellers. So at this point, if we fail up here at pre-market resistance or at the prior VPOC, it would bring the pre-market support into play as a high odds target, 55 quarter to 57 quarter, but that's right below the overnight low. So even though the area still has potential to hold, it's the breakout spot, it's an important zone, it does call for a little bit of caution on the long side. We don't want to see the market liquidating or showing very negative internals or a lot of heavy tick readings to the downside heading into that zone if we're going to trade it long. Because, in that scenario, that zone could give way to the 50 quarter to 52 quarter area, which is essentially the start of the upside move from yesterday. We balanced above that zone for quite a bit before we broke out. So then we can expect buyers to be active on first test of the initial support zone, perhaps 48, and that could be technically a stopping point on the downside, but then we do want to see ES get back above the 55 quarter to 57 quarter in order to confirm that idea. So, if we're taking long at initial support, the 55 to 57 could be a scale out, and then from there we gauge, is the market strong enough to continue heading higher? And if it is, then we could get a move back up towards the 64 area. So we could either balance in that range, or if we fail to get back above 55 to 57 and the initial support zone even doesn't really hold, then that could trigger a deeper pullback, and we could be looking at more of a liquidation type scenario. That's not out of the picture just yet. We've made a pretty decent bounce back up, but at this point, if we break out, the inflection point is 75 to 77. There's potential that ES can fail there and drop back down towards 64. So that's a good reward to risk spot to enter short. On the downside, the really safe location is, closer to the 50-52. And, the aggressive spot is pre-market support, and only makes sense if, we're seeing signs that, this market is going to hold up quite well, where we're not seeing any signs to the contrary, where, we're seeing heavier ticks and things like that. So right now up here, it's a risky spot to be entering long. It's an elevated price, it's an aggressive price, and if we're going to balance out, then pre-market's resistance could hold on the day time frame, and we can balance below it, or we might extend it by 1 or 2 ticks and then balance below it. So it's a risky area to be taking long setups up here. On pullbacks, if the setup presents itself, it's fine, we can consider it. But buying right here is a bit risky, because we can continue to chop in this range for a bit early in the morning before we get a directional move. The relative volume is looking pretty good so far, and typically that leads to a pretty decent range on the day. So we're still expecting a good range on the day time frame. It's just a matter of is that range going to be an extension to the upside towards initial resistance, potentially a little bit higher, or is it going to be a deeper pullback down towards 50, and then we get a better buy response, or even down towards 50 and then it doesn't hold and we go much lower towards 43, 45, and get some buyers active over there. So at this point, the market can really move in either direction. It can balance either at higher prices or at lower. If we break out, again, the odds are higher that we'll balance, simply because we'll be quite extended to the upside then in the short term. And with no major econ release until tomorrow morning, it's unlikely that we'll just march back up towards the all-time high. So on a breakout, we will still look for short setups at 75 to 77. Technically, if there's weakness off the open, even 66, 68 has potential to cap the upside short term. But because we've balanced here overnight, it requires a little bit more confirmation in real time before we decide to take that trade. We need to see some signs telling us that this could be high of day if we're taking it. If we don't feel it's going to be high of day and it's just going to be a rotation, then it's not really worth taking. Then the risk would outweigh the potential reward. So those are really the main ideas on the day time frame. Let's see how the market reacts to the previous VPOC 65 quarter and to 66, 68. That'll give us an idea of how strong this market truly is, and we'll take it from there.